Dwelling values in Melbourne fell by 1.2% over the month. They were 3.4% lower over the last 3 months, and they're 2.8% lower than they were 12 months ago. So the Melbourne market, which has been an underperformer for most of the past 5 years, continues to see pretty weak conditions and values declining. It's estimated that the number of sales in Melbourne was 23.9% lower than at the same time last year. Meanwhile, we're seeing properties taking longer to sell and discounting levels increasing across the city. One thing that is interesting in Melbourne, though, is even though discounting rates are increasing a little bit, they're relatively lower. And I think this reflects the fact that the market's been weak for some time and vendors are more accustomed and attuned to what people are prepared to pay than what we're seeing in other cities around the country. Rents have increased in Melbourne by 5% over the past year. Like most of Australia, we're seeing rents rise at a faster pace than inflation, and that's obviously adding to cost of living pressures. Gross rental yields in Melbourne have also increased over the past 12 months. A year ago, they were sitting at 3.6%, and in July of this year, they're sitting at 4%. I expect with the market the way it is, with tight rental vacancies and with prices continuing to fall, we're going to see those gross rental yields push even higher. And if you're in some of those inner city markets, particularly for units, it's quite easy at the moment to find 5.5%, 6% rental returns. And with the new tax changes, that's going to be very attractive to investors. According to SQM research, the number of new listings in Melbourne was 30.2% higher than at the same time last year. And the total number of properties on the market is up about 42%, and it's the highest it's ever been. So for people looking to buy in Melbourne at the moment, there is a huge amount of properties available for sale. The Melbourne housing market's been soft for a number of years. Over the past 5 years, it's been the weakest performing market in the country. Buyers have got a lot of choice because we're seeing a record high number of properties on the market at the moment, and we've seen fewer people actively trying to buy in the market. So it's really important when you're bringing your property to the market to set a realistic price, listen to the feedback that you're getting from the market and adjust accordingly. I'd suggest if you're not prepared to do that, it's probably not the best time to be bringing new stock to the market right now. We're seeing regional Victoria follow the trends that we're seeing in Melbourne now. Values fell by 0.3% in July. They were 0.4% lower over the 3 months to July, but they're still 6.8% higher over the last 12 months. That weakness that we're seeing and those falls that we've seen over recent months are likely to continue over the coming months. Dwelling values in regional Victoria were 0.3% lower over the last month. They were 0.4% lower over the last 3 months, but they were 6.3% higher over the last 12 months. So over the last year, it's certainly outperformed growth in prices in Melbourne, but like Melbourne, we're starting to see that weakness come into the regional Victorian housing market. Sales volumes have dropped relative to a year ago. According to Cotality's estimates, sales volumes are about 5% lower over the last 3 months compared to the same 3-month period last year. The median time on market in regional Victoria has increased marginally over the past year, as has the level of vendor discounting. Again, this points to a slowing housing market with properties taking longer to sell and vendors having to offer larger discounts to achieve those sales. Rents have increased by 4% over the past year in regional Victoria. This is still well above the rate of inflation, but it's one of the slowest rates of rental growth we've seen across the country. We've also seen that rental yields are stable over the past year at 4.2%, but over recent months, we've started to see that climb.